Good morning. Just gonna go ahead and share the link, guys. We can get started here. All right, we have PPI coming out within the next couple of minutes here at 8:30 a.m. Eastern time. So we're just gonna give it a minute or so to let a few viewers, let's call them. We'll let a few viewers join. But it looks like just by looking at this from hindsight perspective, we've pretty much been breaking this down step by step this entire week. The zones, the prices, where price is at right now, why it's behaving the way it's behaving, where it's at. But we're gonna go ahead and break all of that down in just a second here. And if you're just joining in, good morning. All right, so let's go ahead and get started here. The first thing I wanted to look at was the report that's going to be released within the next 5 minutes. So we have retail sales being released same time that initial jobless claims is going to be released. So we'll be on the lookout for that. Basically, we have one labor market report to look out for, and then retail sales will give us an understanding of how the economy has been performing for the this last month here. So we'll take a look at that because that will directly impact dollar, which we know will get directly translated onto gold, right? So we understand the narrative that we've been following pretty much this entire week. We've been focusing on inflation reports. We've seen CPI reports, like you can see right here on Trading Central. We have inflation readings all coming out higher than expected, right? Like starting with this inflation report here, core inflation rate. We have this other core inflation rate month over month, right? And we all have them above the market expectations, which was right here, as you can see, the forecast, 3.6, 2.6, 0.3, all of these numbers right here to the left, all higher than this number. So we understand where that market impact came from and why gold has been under some more pressure. Even though we haven't seen large moves down, we still see gold mostly moving lower or just kind of staying stuck within this area of interest that we're in right now. I'll make sure to explain that in just a second. And then yesterday, we had a very similar scenario. Higher inflation reports. Gold was sitting pretty much at the same area, so we were expecting for further dollar strength, and we wanted to see gold pushing below areas of interest to validate that bias that we had at hand, which was more on the bearish side, kind of just based off the technicals and based off the fundamentals right here. And so for today, it'll be no different in the sense that we'll be looking out for this report. We understand that retail sales is not going to, or it's not likely to bring as much impact or as much volume as other reports like FOMC's, this previous CPI, NFPs, but still, instead of for me looking at it as like, oh, the retail sales is not going to matter, I more so look at it based off the number that comes out, right? That difference in that number. So for example, like these CPI reports came out well above the expectations. So we could expect just by that number that the market is now having to price in new information. So for example, if we see that today, we have the US economy still flourishing, it's still holding strong, then we know that that's still going to push the Fed away from doing any rate cuts soon. The translation to that is that we can see further dollar upside, okay? That's kind of like the main thing that we'll be on the lookout for here when we're looking at this retail sales report. And so if we look at gold right now, gold is stuck within that range that we have been talking about these past couple of days, right? If I could just continue to extend this area right here, these 4706s, kind of like where we have, and just point that out for you guys. We have in the past this support above this area, and then below this area, it was also created as like a resistance. So we know that that is an area of interest, and we can just see that based off those candle closures and the wick rejections that we have. So over the past couple of days, we've been talking about these 4705s area where we know we have to maintain or close above if we're going to see any sort of moves towards the upside, like what we saw here, like what we've seen here, we've seen it here. Anything above the 4705s, once we start to close above that, like on the intraday timeframes, that's where you see gold make its way towards the upside and at least make a push up into these 4725s, right? That's been the main idea that we've been looking at these past couple of days, right? But we'll go a little bit further in depth on those technicals. I want to go ahead and make sure that we take a look at the economic data that's being released right now, just to kind of see if we have any sort of information that we're going to have to, adjust to or adapt to in case that's going to go against that bearish bias that we've been on with gold. All right. So we'll just let that load there for just a second. Make sure that we have the correct data there. Okay, all right, so it loaded here. So we have retail sales coming out at 0.5%, beating the expectations just slightly, but nothing out of the ordinary here. Same with initial jobless claims. This report here is once more just at 209. or excuse me, it was expected to come out at 209, coming out at 211K. So it's not giving us much information in the sense that we don't have like a very strong, super weak labor market by the initial jobless claims report, right? So the data that we're seeing right now is, in my opinion, a little bit, let me just make sure. Yeah, 0.5%. Yeah, this data that we're seeing right now is nothing out of the ordinary, nothing compared to like what we saw these previous days with the PPI reports, right? But once again, this is not the important thing that we're looking at here is, for example, like we're not seeing the US economy suffering or just kind of like pushing way towards the upside here, right? So that way we can see dollar strength. But the interesting thing about the dollar right now is that we're back at this area of resistance. We're back at these 98.5s that price in the past has previous to really stay above. But again, based off this new information that we just got, we're not seeing any sort of like signs that we have to get any sort of strong pushes up, right? So today, with this data report that just came out, we're going to go ahead and focus a little bit more on the technicals and what price action is telling us, because we understand, or at least from my understanding, we know that the markets is highly focused on those inflation reports. They're focused on the fact that the Fed may not be looking to do rate cuts anytime soon, right? So in my opinion, that's still more dollar bullish and more bearish for gold, but we have to now align that with the zones that we have. So we have here literally the same zones that we've been trading in since literally the past couple of days. I think we started on, so we have right here. So like we have, for example, this Tuesday, this was the day that CPI report came out. We saw CPI coming out higher than expected. And so we prepared ourselves that anything below the 47.05s was going to still be respecting this bearish structure here that price was on. And so we wanted to see further pushes below 47.05s, and then more importantly, break below those lows at this area of support here, which we did get momentarily. You can see price got to this new area of support and reacted there strongly before having a bounce to all the way into like this area here, the 47.25s. After we got that pullback, look once again how price continued to flow towards the downside. We then got another PPI report, a inflation report, once again showing us that inflation was higher in the US. And then once more, you can see that gold was pretty much doing the same thing. It stayed below the 47.05s. We broke below this area of support, the 46, we have the 46.90s right here, these lows. And then we made a push towards the downside, even though it wasn't, let's say, a full move down here. Like this is about 350 pips worth of a range here. This move from yesterday from the 46.90s still pushed about 150, almost 200 pips right here, right? Depending on how accurate you got in sells off of those 46.90s there, right? And so you can see now, let me just delete this here. This is what we were using yesterday. You can see, again, this area of support here, I have this still marked off because this is that area that we have been talking about in the previous sessions, right? Let's go ahead and move that onto the, give me just 1 second here. I want to show you that on the whiteboard here because it's interesting, again, how price gives us clues, right? It leaves clues, it gives you signs, and you can understand just by looking at the past where price might react and where we can see those reactions and be on the lookout for, right? So for example, we're approaching right now an area of resistance where in the past we've seen continued rejections, right? The only difference right now is that we're seeing a strong bullish candle. And so just like we prepared for in the past, anything above those 47.06s, which is where price is at right now, you can expect to see deeper pullbacks if we can maintain above this area, at least up into like the 47.20s and then maybe 47.25s, which is basically what price did here and what price action tried to do here, where it left these wicks right here, right? So you can see right now we're having a little bit more strength on gold, pushing above that area of resistance. But because we've been more influenced on the bearish side, we don't want to be completely blinded by the fact that we're seeing strong buyers right now. And so we could be on the lookout in case we once more show rejections at this area. Because if we continue to reject this zone, then again, ask yourself what has happened whenever price has done that. Just by looking at that, for example, you have an example. That's crazy. You have an example right here where price action went to these highs. You can even see, for example, this strong bullish candle that pushed into this area. At that point, you could expect for buyers to continue to push higher, but that was followed through by strong bearish price action. We rejected and exhausted at these highs before we made a move lower, right? So you can see that example right there, and so you can prepare yourself for that in case this 1 hour candle within the next 25 minutes or so, we got to see if we can actually stay above, because if we do stay above, then we have to be on the lookout for deeper pullbacks up into these highs. But if we continue to reject, then what does that mean? That would mean that we're still stuck within this area that price action likes to range in. And whenever we've gotten into that range, look at what has happened. We've made a move at least down into these lows right here. Does that make sense? That's what I want to mainly look out for in terms of technicals, because today's report did not give us too much new information for us as traders to really have, like, let's say, a strong edge, right? A strong edge from economic data and fundamentals comes when you have those numbers beat the expectations, because then at that point you have clear information and you have a clear bias and understanding as to what the market could do. But right now, again, that information was more so on the neutral side, right? It wasn't giving us anything new that we want to use as traders, right? That's why right now I'm leaving this bias a lot more based off of those technicals, right? So right now, again, we're seeing those reactions at those highs. We still have about 21 minutes until this 1 hour candle closes. But again, pay attention to those highs. Pay attention to the fact that price action has rejected those areas there. So if you are looking, for example, to take buys above that zone, you need to make sure that your bias doesn't get invalidated by price closing back below that area of interest. Because you do, at that point, you're hoping and praying that price is going to push against the idea that in the past, whenever we have not cleared or stayed above that zone, we have not made a move, right? You can see right here also not clearing that zone, no move towards the upside, right? You have that clear representation right there, right? Just clear that screen. Let's look at that on those lower time frames, see what that looks like here. Yeah, we're seeing, and the other thing is, in terms of, like, let's say those, that potential buyer strength above 47.05, we have dollar strength at the moment, right? We're seeing, like, for example, these previous 1 hour candles on the dollar clearing these highs and showing strong buyers in the market, right, on the dollar side. So we're seeing more dollar strength still for the moment, meaning that as long as, again, I'll repeat myself, anything below those 47.05s, you could expect a move back down into these 46.90s. Below those 46.90s, we can be on the lookout for further moves lower there. So what we'll do is we'll mark off, like, these lows, kind of like these 46. I'm gonna mark off the wick lows there, kind of just right there. Let me get that a little bit accurate right there. There you go. What's up, Elijah? Good morning. We're pretty much stuck within that same range. I don't know if you could tell, but that's kind of like the range that price action has been in this, I don't want to say this entire week, because we have had moves lower. The thing that has helped us this week was the fact that the fundamentals were a bit more on the bearish side for gold. That's what has given us a little bit of a stronger edge. But in terms of technicals, in my opinion, this is a little bit messy. Like, just by having this overview of the current chart we're looking at, we're seeing moves up and down constantly. We're not seeing a trending market like what we have, for example, here. This is what you can tell is more so of a trending market, where you have, let's say, for example, large or strong moves down, followed by a reversal and then a continuation and breaking that structure, right? These are trending markets where you have clear moves on the technical side right there. Just wanted to show you guys that there. But look, you zoom in now, and you still have moves, right? You have strong moves take place, but they're very mixed. You have a strong move down, followed by pretty much the same thing by a move towards the upside. The move towards the upside doesn't hold too much, and then it just pushes right back down. It comes back to an area of interest. Instead of price, let's say, breaking lower and trending towards the downside, you actually have price bouncing and rejecting off the 4650s and then getting back into this area where overall, if you really look at that closely, again, a visual example of a trending market is gonna be higher highs, higher lows, higher highs, higher lows, right? We understand the basics of market structure here. If you don't, I would be happy to explain that concept. Same thing when it comes towards the downside, right? You have lower lows and lower highs being made. What we're seeing right now, in my opinion, is a mix of both, meaning that price action is very mixed right now. It's making moves up, but then we have those sharp reversals going against that structure. Another move up, and look at that sharp reversal going against that, right? Another move up, I don't want to say sharp reversal because we didn't see like a move down, but we still got price rejecting those lows. And then look at this price action. This is ugly price action in my opinion, right? This is price showing that it's very indecisive at the moment. That's why I continue to warn you guys and tell you guys that pay attention to the signs that price gives you, which is rejections, 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 all throughout those areas right there. That's why I'm being so insistent on the fact that if you are looking out for buys, you have to clear this area here. If not, there's no reason to try and fight the market when it's clearly stuck in this area. In terms of risk to reward, and with what the market has been doing in the sense that we've had stronger inflation reports, we've had more dollar strength, which we're seeing right now as price action on the dollar, as price on the dollar is pushing higher. Again, be on the lookout for that in case you continue to reject as you're rejecting right now. All right, just make sure there, like, look at, again, just like, even just by zooming out, let me make sure I'm on the right angle. Yeah, we're on the right angle. This is kind of price, excuse the crooked lines there, but price is just sort of stuck within this large range. It's like this large range that got created, and then we have a range within this large range. Does that make sense? Look at how, for example, I'll point this out for you guys, so that way we have, again, that visual picture. So that way we have a representation of what a neutral to indecisive market looks like. And then you have to the left here, more trending markets, right? I'm just showing you guys an example of what those trending markets look like, right? This is right here where you have lows get made, highs, new lows, these highs that get created going with this structure here. It's just a lower high that never breaks above areas of structure, and you see price continuing to push lower. Here you can see price got a little bit stuck, but then once you clear that range, look at that strong push. This is a trending market right here. This is a market where you can look at clearly, and it gives you the clear answer of who is in control, right? Because that's what we want to do when we look at the technicals. When we're looking at the technicals, we're asking ourselves, who is in control? Is it the buyers? Is it the sellers? And then we use those fundamentals to help us understand who could actually step in and dominate price based off those fundamental events, right? So you continue to look at the market here. And again, you have still some examples where price action does stop after you have, let's say, that strong trend that I just showed you guys. You have a sharp reversal, and then you have price action trying to go against this overall trend before continuing lower. But then once more, look, you retest areas of interest, you fail to break any lower, and then you start to trend towards the upside. This is, again, a trending market against this, what we're seeing here. Rather than us looking at the market and thinking, now we're just stuck within a range, we're creating a super large range. You get me? So that's what we're looking out for. We're looking out for those trending markets because we know when we have trending markets is a trader's best friend. That's when you can take advantage of momentum trades. You can take advantage of those large moves where you can actually look to take break of highs, break of lows, and those sort of trades, right? So now let's zoom in. Let's zoom in because look at that rejection, guys. This is why we do what we do. Let's look at that on the lower time frames. And love, good to see you. Appreciate you. If you have any questions, I see here that you're saying understanding slowly. I'll be happy to help with absolutely anything. Just go ahead and ask away. Right now, because we're seeing a little bit of mixed market price action, we see prices a little bit stuck within a range, we can take advantage of this, and rather than sit here and try to force trades within ranges, let's be patient. Let's be patient. Let's talk some market analysis. I want to understand your perspectives of the market. I want to understand a little bit more about what you guys know. What do you guys have a lack of understanding on? And as long as I'm familiar with the subject and I know what I'm talking about, I'll be happy to help. You know, if you ask me something that I genuinely can't answer, I'm not going to sit here and just blabber away. You know, I'll be happy to take a picture of that question and go study that, and I'll make sure to be here tomorrow and give you that answer. So feel free to just ask away, guys. I'll be happy to do that. And again, let's take advantage of the fact that price action right now is stuck in a range, right? We can talk about the importance of why it's not ideal to trade in ranges. I'll go into a little bit more in depth about why I believe it's not ideal to trade ranges, right? Contrary to popular belief, where a lot of people say that they like to trade ranges because it's like buy low, sell high. That sounds, you know, super basic to say. It's easier said than done. And at that point, you're just kind of going 50-50, you know, like why are you trying to trade ranges knowing that there's no clear signals and no clear clues on what price may do next, and you're just going to sit here and hope and pray that price is going to do what you want it to do. And remember, the market is not here to follow your ideas or anything like that. The market does what it does, and us as traders, we got to make sure that we're just prepared, right, and aware of what could happen, so that way we can react on the moment that happens. You know, we don't want to get stuck lost. We don't want to get stuck looking at certain economic events and thinking like, man, I don't even know what this means. We want to make sure we have at least a basic of understanding of that, so that way we can trade with a little bit more clarity, right? We want to have that edge as retail traders here. We have already plenty of things going against us, so we might as well use whatever information possible for us to build a stronger bias when it comes to the markets, right? B Ventura, what's up, man? Good to see you. Let me ask you guys, how was your trading day yesterday? We can also do a market review right now just to kind of analyze what took place yesterday. I think yesterday was super clean. You know, yesterday we had nice moves. Although we were stuck within this same sort of area, we know how a lot of times when we have those economic events, like yesterday we had the PPI report, we understood how price action might be influenced based off that report. And so in case you weren't here yesterday, for me to quickly go over what we were doing yesterday, and you can go and review this. You can go and review this and look at this and to see how we reacted live to that information. And you'll see how we broke it down to the point where we had even the lower time frames marked up. We had the areas of interest marked up. And so, for example, if we go and analyze what happened yesterday, like, let me just circle this right here, just so we know where it is. It was around this right here, which was 8 in the morning, going on to 9 and like 10 in the morning. We can see that the overall moves within those 2 to 3 hours that we were looking at price, it was towards the downside. So how did we react to that? Let's look at that on the lower time frames here. That way we can study these moves. We want to study these things because we know for the most part, the markets love to repeat themselves. You know, they sort of like a lot of people say, history will repeat itself in the market. So what that means is, let's go ahead and study that and see what people mean by that. So for example, yesterday, look how clean this was. And again, you can go and literally analyze this and see this for yourself. Because yesterday, as the PPI report got released, it was right here at 8:30. As that report got released, we understood, okay, we have higher inflation report coming out. This can still signal to us that there may be some more dollar strength, right? So the idea behind that is that if we're gonna get further dollar strength on gold, what could we see? We can see weakness on gold, but for us to validate that idea, what we wanted to see was price staying and maintaining below the area of interest. But when we got onto the lower time frames, we realized that price had created this lower high point right here, and I'll show you guys this on this board. This is what we were looking at. And again, go study this, that way you can see this. We had these highs marked off because it was an area of structure on the lower time frames. And we had these lows marked off as well, which we understood at that point. If we understand that we're seeing dollar strength and dollars pushing towards the upside, at the same time that gold has shown us rejection of highs, meaning that sellers are still interested in price and still interested in pushing price lower, we want to see now continuations, for example, below certain lows, which is this area that we had here. We had this one check mark. We have the rejection, so we have sellers interested in price there. We have another check mark here, which is price pushing below the area of interest. That's a check mark. We had at this moment also intraday timeframes closing below the area of interest, which was, for example, like at 9 in the morning, we had at that point still 1 hour candles staying below the area of interest. So what did we prepare for? We understood that if we're going to get pullbacks off of these lows, where could that pullback come to? We marked off the 4690s as a potential area where price can retest, which it literally did right here. It retested that area, had a minor reaction, but we pushed higher. And we pushed higher into this area of structure where look at that reaction. And again, go and study that because you're going to see that we had put that there before any of this was even there, right? Again, just by using the clues that price leaves us right here. So look at how price action got to that exact point, rejected, and you started to see sellers pushing price lower. Once we saw that price action was rejecting here, and we had another check mark in our favor, right? We had more probabilities in our favor that sellers were still in control. The next thing we wanted to see was a push below this low right here. We wanted to see a push below this low right here because as you can see in the past, once we got below that area, we made a move lower. And look at how clean that was. Price action got to this area, had a minor reaction, but nothing crazy. Once you really start to break that zone, look at that move down. Right? All just by following the clues that price action was leaving for us, right? So again, that's mainly what we were doing yesterday, but we had a strong fundamental bias. We had a strong technical bias as well because we had clear signals and clues, right? Connect that to today. And what is price doing now? Again, mixed because we've seen now price. Look at those reactions that we have, for example. Like look at how, let me just zoom back in here. Give me 1 second, guys. Funny enough, we even said that if we are to see price stay or close back above the 4690s, where did we say that price could potentially go to? Like, can you guys give me that answer in the chat? I'll give you guys a few minutes. I'll ask the question once more. So remember what we were just talking about. We were just talking about the fact that the idea was to look out for further sells and further bearish price action on gold. And we knew that we needed to trade below this area. If we were going to see a deeper pullback, where did price need to trade above? We already know that's the 4690s. And where is price likely to go if we are to trade above 4690s, giving us a signal that price action could do a deeper pullback? Can you guys give me that answer in the chat? Trader Ken, good to hear from you as well, my friend. As you can see, we are back. We have a very nice setup here. You know, we're in class right now. But if you guys want me to ask that question again, let me know. I'll gladly ask that. I just want to know and I want to see if you guys were paying attention to what we were talking about. So let me know if you want me to ask the question once more. Because even if you weren't here during the session yesterday, just by looking at price right now, you have the answer in front of you. So I want to make sure that everyone here is paying attention and actually paying attention to what the price and the charts are telling you. And we're not just here to look for free and easy signals to trade, you know, because we're here to improve. We're here to get better as traders. We're here to up our game as traders. So I'll be patient. I'll wait for that. If nobody can give me the answer within the next 5 minutes, then I'll say it again. I think I've said it multiple times. But again, even just by yourself, look at price action and understand that. If we got above the 46.90s, where is price likely to go? Not where is it going to go, where is it likely to go? Based off the price action, based off those signals that we have there. Okay, I'm going to ask one more time. I got you. No worries, no worries. I'm going to zoom in here. I'm going to zoom in because, again, even if you weren't here during the live sessions, you can still answer this yourself by just looking at price. So the question is this. My question to you guys is, if price is trading above the 46.90s, and we see price again above this area here, 46.90s, 46.90s. These are the 46.90s right here. These lows right here, 46.90s. This area, this is the area we're looking at, right? If we are to trade above that zone, where is price likely to go? I'll give you a clue, or I'll give you, this is going to be like multiple choice right here. Actually, no, that's too easy. I want to see you guys actually look at the market. Again, the 46.90s, if we trade above the 46.90s, where is price likely to go? 4700s, there you go. 4700s, 4705s, I would say around that price range. 4700s, 4705s, thank you for answering that. And again, that's clear because we can see that right here in front of our eyes. We can see any time that price has stayed above the 46.90s, above 46, even here, even though here we had strong push down, look at how price, even though it got above momentarily, I'm not sure if you guys can see that. I'll zoom in a little bit more. I'm looking at this wick right here. The wick got to pretty much the 4700s. So I asked that question multiple times because that's what we're doing right now. That's what price action is doing at the moment, and that's what we prepared for yesterday. Because even though, this is something that I want to be very clear about, even though at times you're going to see strong fundamentals, let's say in favor of sells on gold, like what we saw this week, you still need to use price as that tool to help you understand where is price likely to go, what is price doing right now, because you don't know a lot of times if price action is going to do a deeper pullback to then overall continue. So yesterday, what did we literally prepare for? And it's exactly what was your name again? Edward? 4700s, I would say. The 4700s is the better answer, at least taking it level by level, because 4760s, that's super high. We would have to clear so many areas to really get there. I'm not saying it won't get there, but we're taking it level by level just by something that we could possibly see during session. So we understood that even though, let's say we had technicals bearish, right? We had bearish price action. Fundamentals were telling us that price is likely to go and push lower based off the strength that we see on dollar. Even though we have those confluences and those probabilities in our favor, look at how still by analyzing price, understanding where price is trading above and understanding what price has done in the past, which is trade above 46.90s. From the 46.90s, it goes to literally this exact price point, which is what you just said, Edward. The 4700s, right? The 4705s, which is where it's at right now. So right now, we just got another hourly candle close. Look at that hourly candle close. It's still closing below. In terms of probabilities, for buyers, this is still not a clear sign because at this point, even though within the next 5 minutes, even though price can do what it wants and say it can still push higher, the chances of doing that are low in my opinion, because when has price done that? It didn't do it here, where price was clearly closing strong, it still pushed lower. It couldn't do it here, where price was still looking strong. It even got above that area pretty good, still pushed lower. When did it actually do it? When you had candles closing above that zone. That's when you actually saw a strong move higher. At that point, when you're really clearing those highs, that's when you can expect a move higher. That's when you can be on the lookout for a deeper push back into another area of interest, which again, price action tells you, which is this area right here. That area of interest. So we take it level by level. So we understand again, above here, prepare for a deeper pullback. Anything below here, look at that reaction right there. That's happening live in front of you guys once again. You get me? You have rejection still, failure to really push above that area. Prices, you still have sellers at this area. You still have sellers stepping in at the zone, pushing buyers back. So at that point, again, let's use price action to our advantage. We would expect for price, if we have a good amount of volume come in, and if we continue to see rejections at this zone, we could potentially go and retest those range lows right there, which at that point, price would still be ranging. What we would want to see is rejections, retest of the lows, and further continuations below this area. If we continue to see dollar strength, which is what we're seeing right now. During the beginning of the session, I think dollar was like up 0.10%. Right now it's at 0.16%. So if we look at that, I'm assuming it's pushing. There you go. So dollar is pushing right now a little bit towards the upside there. You can see that. And then at the same time, that gold is at that area of interest, at that area of resistance, and still continuing to push lower. Let's look at that on the lower time frames here and see what that looks like. Look at that, even on the 5-minute candles, we still have exhaustion. We still have failure to really stay above that area. Like look at this candle right here where it tried to push higher, right? And still we closed doji, we closed with a rejection, and that was followed through by a bearish engulfing candle pushing price lower. Look at that volume right there. Once again, price action retests that area, rejects that zone. We're now down. That's 80 pips right there in front of your eyes. That's easily, I would say, more than a 1 to 2 right there, which stops above those highs easily right there. Look at that. That's a 1 to 2 right there. That's at that point. Obviously, everybody has their own trading plan. Everybody has their own way of trading. I'll always make sure to remind you guys of that. But still, the proof is right there in front of you guys. At that point, if you did decide to take sells, make sure you manage your risk accordingly. Make sure you do not get too greedy. You know, make sure you either secure profits, trail stop losses. There's a ton of ways to manage your risk at that point. But so far, look at those rejections. Look at the idea that we had mainly, as long as we did not break above that, which is what we got right now. Now at this point, we're trading in the middle of the range. At this point, what I wanted to go in a little bit more, those cells were pretty. That's funny. What I wanted to go in depth a little bit more during the beginning of today's session is when you're trading in ranges, you want to make sure. And even if price wasn't ranging, this is why for me, those optimal areas, like those key areas of support, those key levels, you want to use those areas to your advantage, because you can see right here why that's so important, in the sense of like, if we are to look for optimal trade ideas, right? Let's just analyze the market, let's say a bit objectively here, and let's ask ourselves the question of, a very important question. And this isn't a question that you should ask yourself before taking any trades. It's like, instead of thinking more about, am I gonna win? You know, I'm gonna win this trade if I take this trade. Ask yourself, what's the risk that I'm putting behind the market, and what's the potential upside, right? So in this case, when you're looking at the market, and again, let's forget about biases. Let's forget about the overall structure. Let's even forget about the fact that price is stuck in a range right now. Let's just think about the fact that price is giving us these areas right here of interest. And so when you look at these lows and you look at these highs in comparison to any other price point within this area, like obviously you can see reactions within that range. Ask yourself, where would you want to take a trade? You know, just by looking at the market, and to give you guys that answer, if you want to look for buys, would you want to look for buys at a lower price point, at a mid price point, or at a high price point, right? Ask yourself in the sense of like risk to reward. In my opinion, best answer to that is going to be on the lookout for buys at the areas of interest that are, for example, these lows. Not just because of the fact that you want to buy lows or a sell high. It's more so the risk to reward. It's more so the idea that if you were to buy at this zone, at this area of interest where you see, for example, buyers step in and push price higher, look at the potential risk that you have, which is just below those lows. So you have about this much worth of risk. Say you're looking for buys at these lows. This is the risk that you're putting out. You understand that if price action is trading below that area of interest, why 5 buys at that point when you know that price can do deeper pullbacks? So you have like a very small amount of risk that you have to put on for a potential very large upside, and the same works vice versa. If you're looking for sells, why are you going to look to take sells in the middle of a range? When you're trading in the middle of a range and say you take a sell, look at how much risk you have to put on for maybe this right here, for not too much potential downside there. You get what I'm trying to ask? You want to make sure you understand what risk you're putting on. So that way, next time you see price action stuck inside of a range, you're not looking to rush into trades. You're more so waiting for price to reach those optimal price points. So that way you can understand that even if I take a loss, it's going to be a minor loss, and I could look to adapt and maybe follow the market. In the sense, like if you were, let's say, looking for sells at this area, but then price took you out and continue to push higher, at that point, it's as simple as letting that trade go. No need to force that. Let price action do what it's going to do. You can either sit out and call it a day because your bias was invalidated, or wait for price action to do pullbacks, give you a retest, and you can look for further buys. So you understand, again, what's my risk? It's below that zone, because if we get back below that zone, I don't want to be part of that. And the potential upside is plenty of opportunity towards the upside. Does that make sense for you guys? That's why for me, looking at ranges is it's pointless for you to even be stressing about the fact that price is stuck in a range. If you're in a trade right now that you just got in, it's very 50-50. You don't know if price is going to come here. You don't know if it's going to come here. And you're stuck holding a position in the middle of that range. I would much rather be holding a position from these lows or from these highs. So that way I have a clear view. I have a clear understanding. I have my buys. If you break below, I'm going to let that trade go. I took my loss. It is what it is. If I took my sells and I see prices trading higher, I let my trade go, I move on, I let the market do what it's gonna do. I'm not here forcing trades. And I say this because I, for one, was someone that no matter the market conditions, no matter what the market looked like, I would take a trade here, I would take a trade here, I would take a trade here, and I would just completely ignore these areas of interest that price gives you, right? Because even like, for example, here, if you're looking for sells at this area of interest, there's gonna be those times where, yeah, you do trade above that area. But if you're patient, look at how, for example, price, even after it got above that zone, right? You got above the zone. Say you took sells and you're just only looking to take sells. You take sells, price stops you out because you push higher. You decide, I'm going to be patient. I'm going to trust my bias. Price ends up melting and ends up pushing lower, retest these lows, and then look where it goes to. It goes right back to that area of interest and then pushes lower. You get me? So at that point, you know that's that optimal zone. That's that area of interest I want to be involved in. So I have at least a better risk to reward. Risk to reward is something you want to take into consider each time you enter a trade. Without understanding your optimal risk to reward and the zones and the risks that you're putting on, at that point, why even look to trade? You got to be prepared. But does that make sense for you guys as to why I believe it's important to maybe stay away from ranges? Don't be convinced by the idea that you have to take trades every single time you get into the market. Make sure instead of thinking, am I going to trade today? Ask yourself, is my edge going to be present today? Is the market going to give me what I want to see based off of my trading plan? I'm not worried about Tarzan's trading plan. I'm not worried about anybody else's. I'm worried about my trading plan, my edge, and what I need to see, the entry criteria that I need to see. Because remember, you need to have this all written down. You should have a trading plan that you could just blindly give that to someone. And if they were perfect individuals, they can also follow that. But we know that whenever you share trading plans with people, it's going to be very difficult for you to follow along the same thing and do exactly as they do, because we all have different perspective. We all have a little bit of different ways of analyzing the market. Although we, in my opinion, we still look at the same market, we still have different perspectives, you know? So far during this session, in terms of like the trade ideas that we were looking out for, understanding that we're a little bit more still on the bearish side because we have dollar strength, and the fact that although this data was still very neutral, we still had a slightly above expectations retail sales report, right? A bit higher than that 0.4. It says 0.5. It's not a strong difference, but it's still a tiny bit stronger, right? So we understand why, for example, dollar is still holding strength. It would have been different if we saw a very pessimistic report. Like if we saw a negative retail sales report, at that point, we would have probably switched our ideas. At that point, we would have been telling ourselves, with such a bad report that came out, we could see that sentiment shift around the US dollar. Let's be on the lookout for weakness on dollar. Let's be on the lookout and see if dollar can react and reject these highs. That's how we would have changed a little bit our analysis there. But because we didn't see that, then we understood, you know what? Retail sales are slightly above expectations. The jobless claims report is pretty much neutral. It's not giving us no new information. That's basically what that tells me, and what directly goes into my head is there's no reason right now, obviously anything can change, but there's no reason right now based off this data why dollar is just going to melt. You know, like we're not just making up scenarios here. No, we're using the data from the economic data itself, the news events that take place, and the price action. That's why we were more on the lookout still for further dollar strength, just by even looking at the technicals. Let's say we even forgot about those fundamentals. Just by looking at the technicals, we have price trading above the area of resistance, strong candle closes above the area of resistance. We have a rejection of these lows, we have price trying to reject this, and it actually ends up pushing lower, but rejects and actually ends up closing higher. That tells me that buyers are still very much in control here on the dollar index. So that translates to gold, that anything below those 4705s, which is the area that Edward pointed out, what we were talking about earlier, we can see further moves lower off of that zone right there. But look at how we only got to the mid-range right there. It was about 80 pips, which is still decent. It's still valid. That still gave a positive risk to reward trade opportunity there. But the overall move could be even 150 pips or more if we make a full move down without invalidating this bias by breaking and closing back above. Does that make sense? Let me know if that makes sense, guys. And we'll just delete that so that way we don't confuse anyone. And also, by the way, for those of you that are, maybe it's your first time joining these lives, we do go live every day around 8:15, 8:20, just usually about 10 minutes before any sort of economic data gets released, which we know economic data, the important ones for the most part, usually will get released at the same time, which is 8:30 a.m. Eastern time. So we'll always make sure to be on lives just before that. So like I've told everyone, make sure to subscribe, turn on the notifications so that way you get that notification every single time I'm live, and you don't have to be like refreshing the page waiting for me to go live or anything like that. We've pretty much started around the same time every single day this week, and this is our first week of doing this. What I did want to do, guys, is for those of you that are actively trading and those of you that use this analysis to your advantage, obviously combine with both. Like, please make sure that you guys do your own research. Make sure you do your own analysis here. That way we can on Fridays review some of the trades that we've taken. Let's review some of the ideas that actually took place, that were actually valid, and see whether or not we took trades. That way we can see, even if our analysis is wrong, We're going to study that, analyze that, and understand what changed. Why was our analysis wrong? What did we have missing? Were we missing a piece of information? Did we not see a certain technical clue that we missed out on? If we were talking about, let's say, good analysis and we did really well, did we take trades, right? We don't want to just sit here and do good analysis. We want to sit here, do good analysis, but also make money, right? So we want to make sure that, like, for example, each Friday, from the trades that you guys took, feel free to share that with me, like on social media. Feel free to share that with the GatesFX social media and let us know, like, hey, look, I took these trades during this session. I would like for you to maybe review them. I would like for you to maybe show them, right? It doesn't have to be about boasting profits. It's more so about following ideas, repeatable actions, right? Basically, we want to avoid any choppy area. So this is what Trader Ken says. So basically, we want to avoid any choppy area and just look for clean traffic according to the price action. Exactly. That's what we want to do. That's what we want to do. Because we have so many areas of reaction that is just, they're just so clean, you know? Like, look at how, for example, it's not going to be perfect all the time, but the examples are very clear. It's like, you have, this is a very good point that Ken just made, which is like, avoid those choppy areas because you have them all over the market. And then look for those key price zones, right? Notice how, for example, if you look at the sessions that we've done during this entire week, notice how we've used pretty much the same prices. Why? Because we understand that this is not random. You know, I see a lot of traders, which, again, not to disrespect or go against anybody's way of trading, but I see that a lot of traders love to do fresh analysis as if the past didn't matter. And so they get onto the market and they do new analysis and they don't even connect it to what's been going on in the past. They don't even look to the left. Versus what we do in these live sessions is we make sure to understand these price points of interest, because these price points of interest, they're not random. Price doesn't just randomly and coincidentally go to the exact zone where this area reacted and give us moves up or down, in the sense that here we got above the area, respected this zone and respected it as an area of support, and we pushed higher. This is the area of interest that we're looking at right there, the 4705s. Same as if we flip it vice versa and we use it now as an area of resistance that was created right here, which price literally did the exact opposite of that right here, which is pushed lower, retested that area of resistance and stayed below that for us to get a move lower. But the move comes from the area of interest, the price point of interest, the exact price point. Does that make sense? Look at how you have that right here. You have it here, you have it here, you have it here, you have it right now. The exact price point right there, guys. You get me? Same thing if we look at another area of interest. Look at how, for example, this is a key area. And look at how you have minor breaks above. This is not a break above, but this one. Say you have minor breaks above, but you still have the key area of interest, the price point of interest, right? 4750s. The 4750s is an area where in the past, if we look at that and analyze that price action and understand, right? This is the point that I'm trying to make. Anything below the 4750s, just by understanding price action, what has happened in the past. If we reject that zone, we've made a move at least to this zone of interest right here. We did that here. We had a slight move up, followed by a very strong move right back down to that exact price point. This exact price point right here. Look at how you break above this area of interest and go to retest that exact price point. You got lower, and where did you go? This exact price point. It's price points of interest. Price gives you those clues, right? So we don't want to be blinded to that. You see it all over the place. Look, this is not a coincidence that price got to this low right here, and look at that rejection. And then that rejection, where does it go to? Did it go to some place random? No. You literally push off of this zone of interest right into another zone of interest, which is this area right here. You get what I'm saying? It's all here in front of you. The answers are all here in front of you. It gives you those clues. It's exactly what we did today. If you look at the beginning of this session, it's exactly what we're doing today. We use this exact price point of interest to understand where we need to break above to have further pullbacks and maybe see a repetition of like this. If not, what could we see in terms of probabilities? Rejection of those highs and a move back to these lows. Look at that. Rejection of those highs. Dollar continues to strengthen. We're now up 0.18%. Gold has now pretty much reached those lows. And we've made now a move of over 100 pips. This isn't 10 pips we're talking about here. We're not talking about 15 pip moves. We're talking about large moves. This is 100 plus pips right here that you have from one price point to the other. Apologies there for the angles. What's up, Trader Ken? Yeah, I know exactly who you are, brother. It's good to see you as well, bro. It's been a while. It's been a while. I'm not entirely sure how active you've been this year with trading, but I'm happy to say we're back. We're back. We're back. As you can see, we have a very nice setup. We have clean trade ideas. We're doing what you know we do best, which is combine those technicals with those fundamentals, tie some trading psychology into that, and you have a beautiful trading edge right there. And I mean, look at that. Let's zoom in there and look at that. Let's analyze that. Come on now. That's clean. That's super, super clean movement right there. So we have, let's go back here. Again, price point of interest, 47.05s, 46.90s. You had price rejecting these lows and pushing higher. And then once you get into these highs, you have price trying to push higher, fails. You push slightly above this area, you fail to really stay above, right? You want to stay above the zone to signal that buyers are in control. But if you see that buyers are pushing price above an area of interest and you have a clear sign that sellers are stronger at that point, look at that move towards the low, towards these lows right here, followed by a further retest of that area and another rejection, another move lower. Price then once more retest basically 10 pips away from our zone of interest. It got to 47.05 instead of 47.06. That's like almost precisely that area. And then you have that move lower. Again, what are the clues? The fact that we could not get above the area of interest and close and stay above that. That's our clue right there. That's really good to hear, my brother. Yeah, the lives will be strictly on YouTube, but as you can see, man, everything, all the chat, I'll be happy to read that and just go at it with you guys. If you guys have trader buddies, let them know what we do. This is completely for free. This is on YouTube, as you can see, oh, sorry. I thought I just saw a large spike in volume, but no. But like I said, make sure you guys share this with your trader friends so that way they know where they can join in the mornings and have clear, objective analysis. Because as you guys know, and especially those that know me, you guys will always see how I'm never going to tell you what to do, but I will give you the best clues and signals as possible based off the fundamentals and technicals, because to each their own. At the same time that someone might be looking to take, I don't know, just to give a random example, At the same time that someone might be waiting for price to break higher and push higher because they have their analysis set up a certain way, there's another trader looking at this area as a sell zone. So what I'm gonna do is I'm gonna point out the price points. I'm gonna point out what the technicals are doing. I'm gonna tell you what fundamentals are influencing price, and I'm gonna help you understand what are the stronger probabilities for. Because again, I'm not here to hold your hand and take trades for you. I'm here to point out these clues, give you valuable insights. That way you each can make your own trading decisions, and you guys can have full accountability. It doesn't have to be, I told you so. It doesn't have to be that someone in the chat gave you a signal. No, it's just objective analysis. Connect this with the analysis that you do to the best of your ability, of course. And you guys are gonna see, the more that we do this, you're gonna see that flow that we're constantly on. So for example, if we continue right now, where is price action right now? We're back at those lows and we're reacting once more. So we have already our areas of interest marked off. We already know that we got the rejections of those highs and we still have dollar strength, right? Dollar is still climbing towards the upside. What's the next idea here? For the first part, we want to make sure we break below those lows, and we want to see if price action can, if anything, give us a minor reaction, but we don't want to see a move back up. If we see a move back up, at that point, price is just ranging and there really isn't very strong probabilities in favor of either buys or sells, because you have price rejecting highs, reaching lows, looking like it's going pretty strong. Like these are very strong candles. Like look at this candle, for example. That candle went from the 4700s down to below 4696. That's above, that's like a 60 or 70 pip candle. Let's measure that. That's one candle, that's 1 minute candle right there that pushed 60 pips. So what we want to see right now is, okay, if we're seeing seller strength right now on gold, that's a check mark. We have dollar strength, that's a check mark. Like let's say, for example, we have, can we write this down? We have, let's see, we have dollar bullish, we have higher inflation, we have rate cuts or rate cut bets diminishing. I'll just put a D. We have bears. We have bears in control. So at that point, when we talk in terms of probabilities, we have a lot more things in favor of seeing gold push lower. But what, instead of us just blindly following this and thinking, well, let me just take a sell and hold for, sheesh. Instead of me just looking to take a sell and holding forever, let me take this level by level. Let me take this step by step, meaning where does price need to get below now? If we've already rejected these highs, which I've pointed out now like 5 times, where do we need to get below now? If this is going to continue to hold strength, we have further dollar bulls, higher inflation is the main market narrative right now, which is what we saw with the CPI and the PPI report. We have rate cut bets diminishing, which is more dollar bullish. We have more bears in control on gold. We've already gotten the rejections. We already got about 100 pips worth of movement. So the opportunity, we could end the stream right here and call it a day. We've already seen our trade idea play out. But taking it level by level, what's next? We have now price giving us a reaction at the lows, and we have now created a lower high point right here, which is this area of interest right here. In terms of optimal price action, my favorite word, we would want to see price get no higher than that and continue to stay pushing lower and get below those lows. Because if not, what do we have? Look at that volume. Pay attention to that volume there, guys. Because if we don't see price, for example, respect these highs, we would be rejecting lows and we would be trading still back above our area of interest, which is this 4690s area. And we'd be trading above here. At that point, if you look at that market, that is just a ranging market at that point. What do we want to see instead of that? We want to see trending markets, meaning we want to get price below the zone as we're getting right now. As we're looking at price action right now, price is pushing lower. This is what we want to see. But again, we just want to make sure that we look at this objectively. And we have now this area to mark off as a lower high that was created. But look at that volume coming in. That's NYSE volume coming in. We have 30-minute candles that just closed and closed very strong bearish, as you can see right there. Dollar continues to push higher, as you can see. We've gotten that push now below. At this point, what we can do is prepare ourselves for a pullback. Right there. We can, Spider-Man. We can prepare ourselves for either further pushes into these new lows in a new range and possibly down into the 4670s, or expect minor reactions, but then those reactions, we don't want it to get above this zone right here. So we can, for example, looking at this sort of price action that we're getting right now, we've gone from a range to finally rejecting highs and trading now in a more bearish structure here. You see that? We went from ranging to rejection of highs to price creating lows, lower high, another lower low, which is pretty much the same as this one, lower high, same as this one, a new low, which is a retest of these lows, a lower high point right here, and a new low that price just created. Meaning if we were gonna get strong structure being created here, we'll get a lower high, go no higher than this previous lower high point, and then we can get those further pushes down, or just a simple continuation below this new low that price created here, which would be basically this continuation below lows, retest of lower highs, and continuation. That's what we're getting right now. Lows, let's see just how far those lower highs can get. Ideally not above here, and then we can push, and then we can potentially push lower. But overall, so far for this session, I think we've done really good analysis, and this is really good moves that we've gotten here. If we measure this now from that zone to this, over 200 pips worth of movement. So if you guys can go ahead and hit that thumbs up, let's make sure we get people aware of these lives. And then I also want to know a little bit more about you guys. Tell me how you guys trade. Do you guys scalp, day trade, swing trade? Did you guys take any trades today? If this is new information for you, does this make sense? If you've heard me talk before and give analysis, is it still, as good as it was before or better? Let's connect here a little bit more, guys. I want to know about, are you guys strictly technicals, strictly fundamentals? Do you do both? I'm not entirely sure what that means, Edward, I'm gonna be honest. Tell me a little bit about that. I've never heard of that, to be honest. Trending inducements. But all right, price action is looking still pretty clean. We've done a push lower, a retest of the 4690s, and now price is trying to get below. Okay, so pullbacks in the trend using EMAs. Okay, nice, brother. Do you use strictly EMAs or do you align structure with that as well? That's what we mainly do, for example. Like we do more so a lot of market structure. For me, I don't even, not that I don't look at trends, because obviously trends are important to look at, but if you have a good understanding of market structure, that gives you the answer to the trend. So it's kind of like pointless to look at both. Let me take this away. Look at that. We have a nice volume coming in here. Let's see if we're gonna get any further pushes lower. But I mean, so far, guys, that's not a bad session for 200 pips worth of a push off of these highs right here. Break of structure and internal liquidity. Edward. Okay, trader Ken. As you know, I'm very much a price action trader. I look at the fundamentals to give me the reasons for the moves in the market, but technical analysis gives me the sniper areas to get in and out. Nice, bro. And how has that been working for you? Yeah, I always tell traders, don't get married to either or. It's information, guys. There's no need to be super egotistical about strategies when the market is just, at a lot of times, I was gonna say very much, I don't want to say it's random, but a lot of times it pretty much is, you know. You can never really tell very clearly what the market is gonna do. All you can do is kind of prepare yourself, which is what we do, and we do it damn well. Has been going great. Nice, brother. That's what I like to hear. As long as we make money, we're good. That's what's important. And in a repetitive way. This isn't like, oh, this only works once a month. No, this is, we know technical analysis is a clean concept that you can pretty much follow and use every single day, every single trading session. And we very much understand that the fundamentals rules that overall narrative. If you have an understanding of fundamentals, you have an understanding of where that market direction may go. Those technicals is like Ken just said, it gives you those sniper points, those entry points. It gives you the tool to be able to use and do things which like this, what we do, which is do top-down analysis, go down into the lower time frames and understand, connect that with that overall analysis that you've done on the higher time frames. That's why, for example, I apologize if I maybe haven't done any further top-down analysis since the beginning of the week. But since we're pretty much in the same exact trading area, not that it's pointless, but we're gonna get to the same conclusion, you know? If you guys want me to do analysis fresh every single time, even if we get to the same conclusion, I'll be happy to do that. But for the most part, I like to leave the clues there and the price there as it was. That way, during the next session, we can go and understand where the price react, where did it go to, did it actually reach my area of interest that I was talking about? And that way you're not like trying to catch up every single session. It's more so you're following the flow, you're following the narrative, you understand what's happened at the beginning of the week, later in the week, and you have that visual representation right there in front of you. But so far, we'll do this session we'll do it for another 20 minutes. We'll let this 1 hour candle close, but so far, I think we've had really good moves. I would love to learn a little bit more about you guys. So feel free to ask more questions. That way we can make these lives more engaging. We don't want to just sit here and watch, and you guys watch me watch price. You get me? Let's sit here, let's talk, let's understand our perspectives. That way we can all learn. But man, look at that move. There you go. Did anybody take any trades today? So far? Did you go for buys? Did you go for sells? If you took sells, tell me where. What was that entry point that you looked for? If you were looking for buys, tell me where and tell me why. And let's analyze that. Let's see different perspectives. That way we can understand that. Missed out on the break and retest on the one. Assuming you were waiting maybe for NYSC. You got all the move gold. So you took sells from where? From the highs? And you're holding? Or look at that move. Look at that move. And then you ready? This is why you wanna, in case nobody is aware of those market correlations, look at that move. Look at gold. Ready for this? Look at dollar. Come on, guys. This is edges right here. Market understanding, market awareness. And Brian, all good, man. Don't beat yourself up, but journal that, bro. I think you told me that yesterday as well. Or was that you or was that Elijah? I'm not sure. If you were telling me, look at the price action, by the way. Don't get greedy once again. If you decided to look for further sells, understand where price is right now. That line is not random. Okay? That line is, if we look to the left there, an area of reaction. It's an area where price in the past has reacted and has pushed higher off this area. So whether that means take profits, trail stops, decide that now before you get greedy, before you take out your phone and try to flex it on Instagram. Act quickly, guys, because we're at another area of reaction. We're at an area where price can potentially at least maybe do some deeper pullbacks, or for all we know, we're just gonna get a strong continuation below. But look at where we're at. 15-minute time frames. Look at these previous 15 minutes. Strong push lower, gets to that zone, rejected. Another push here, rejected. Another push here. Right now we're reacting and we're rejecting as we speak. So pay attention to that. But that's right there for the session so far, from the 4700s, 4705s. 370 pips worth of a range. Not to boast or say oh, you should have held sells for that much, but just to show how we follow through on that analysis since the very beginning. The continuations, the rejections, the dollar strength, the overall narrative, we had it all listed out, all written out for you guys. So far it looks like only one person took a trade. Anybody else? Or is anybody maybe waiting for further trades? Yeah, gold pushed. That's a very, very nice move. Over 300 pips right there from those highs. Let's look at those lower time frames. Look at that reaction right there. Precisely. Literally the point that I was making earlier. How price action doesn't just go to random places. It has its ways of moving. It's why we mark off these zones. Look at how precisely price is, let's say, just looking at this hindsight, it is literally melting and pushing strongly towards the downside. And it just so coincidentally stops at the 4690s before pushing below and retesting the 4690s and continuing from there, and then making another move lower, reaching another area of reaction, the 4670s, and from there, do you guys think it's a coincidence that you now have this reaction? No, no, no. That's technicals right there. That's price action. That's the importance of understanding these market moves. Gold entry 46.97. So you took trades off of this lower high point right here. Stop loss 47.07, so large stop. TP 46.68. Okay, literally tapped that. So that's let's see what that risk to reward looks like. One to two. Nice. Look at that move right there. That's a move to take a picture of, journal that. Excuse me. Yeah, journal that move. And as I always tell traders, stay humble. Stay humble, call it a day. Be careful with giving your profits back. Look at that move right back up right there, man. This is beautiful reactions that we just got right there off those 46.70s. And now we're right back at another area of interest where if we're going to continue to push lower, this is where ideally we'd have to start pausing. Because if we follow through from after the rejections off of those highs, what we're seeing right now is bearish structure starting to get created. All right? But as we reach these lows, look at what happened. Ready? Coincidence or not? As we reached those lows, dollar started to weaken off of those highs that it was created at the same time that gold came to these exact lows and reacted. The exact lows that we pointed out because of based off the reactions that we've seen in the past. And now that we're back here, we have one or two scenarios. We're gonna get a decent pullback to just those 46.90s. And ideally, this is where we want to stay below for a typical picture perfect, we can call it, break and retest type of scenario where we continue to reject this and can potentially make our way back down to these lows. Because if we start to trade above here, again, using the same price points of interest, what has happened in the past after we get above 46.90s, we've ranged and made our way back up into these highs right here. So at that point, why try and force sells? You know, so what we want to be on the lookout for is we want to make sure that dollar is continuing to strengthen, which right now I took a little bit of a hit. It was up like 0.25%. It came all the way back down to 0.15%. At the same time that gold started to recover as well. You can see literally it's like transactions being made at the same time, going from one hand to the other. And so again, ideally, we want to see price stop at this zone here, start to reject anywhere between in here. So we have moves lower. If not, we're just back in this mess, back in this range. At that point, things are very, very tricky, you know? Because at that point, ask yourself the question of like, if we're trading above this area, who is to say that price is going to sell off again? But even on the vice versa, on the buyer side, it's like if we trade back above this area, you're back in a range. Are you really going to bet your money that price is going to once more reach this area again? In terms of probabilities, I think there's days that you have stronger probabilities in your favor, in my opinion. So just be careful with that. You got the 46.95s as an area of interest that we have on these lower time frames here. You want to make sure we stay below that zone. That way we can continue to have these bearish price action probabilities in our favor. So this is what we want to see. We want to see rejections. We want to make sure we got engulfing candles back below this zone right here. So that way we can mirror this move that we just did. Dollar is once again starting to show a little bit more strength there. So let's see if gold is going to follow through and start to make a move back down, if as long as we're not breaking back above this zone. You're in a long trader, Ken. I'm in a long trade now, already 1.5 risk reward, ready to close it if it pulls back. Yeah, I would say if you took buys off of those lows right there, then just be careful around the price zone that we're at, because you can pretty much pause anywhere around this area here and possibly make a move lower. Oh wait, I'm over here, sorry. Done for the day, nice. So you hit double TP today, sheesh, okay. So do I send you bank info and you send me the wire, or? I'm just kidding. But nice, man, good stuff. Make sure you journal. Make sure you go over that, review it. Understand clearly why you took the sells, why you took the buys. Understand it wasn't a random thing that you were doing. See if it's a repetitive, I don't want to say see if it's a repetitive thing. I'm assuming you're an experienced trader based off those trades that you're pointing out. And so you know what you're doing. You know you have to journal. You know you have to maintain your composure. Because we know how easy those markets, those profits can go right out that window. Easy. Especially with gold. Brian took the longs back up level to level. Did you secure profit at the 46.90s? Assuming that you went for a longs off of those rejections at those lows, 46.70s. And like I said, guys, make sure, take a little screenshot, post it on Instagram. You can tag GatesFX. You guys have my Instagram as well. You can tag me, Tarzan Trades. Send you a picture on Discord, okay? Nice, I'll take a look at that after we're done with the session. Okay, actually you already sent it. Oh yeah. That's clean. High risk, I will say that. Super high risk, because you literally had price melting into that zone with one minor rejection. And so you took your trade based off that edge alone and you got paid. Again, journal that. Look to move on and see if you can continue to repeat that same process. Ken, I've been humbled so many times that I have learned my lesson. Been there, done that. Never ever try and outsmart the market. I only take repeatable setups as they are my edge. There you go. Hats off to you, my friend, because that's the way to go about it. Repeatable setups, not random home runs. I was gonna say home run. Back to high school here. But yeah, no home run, just repeatable trades. 50 pips at a time, 60 pips at a time, 100 pips at a time. This isn't about getting onto the market and today I want to look for 300 pips. The market is just it's gonna humble you continuously. Thinking like, oh, you know what, today my goal is to make 100 pips. The market doesn't owe you anything. That mentality right there can hurt you in trading. So it's good that you have that understanding right there. But again, share this. Let's get these lives more popping. All right, so far we have still a bit of dollar strength. Dollar's recovering a little bit again, starting to push a little bit higher. We have a ton of volatility going into the dollar right there. But all right, gold is giving good reactions here at this area, doing a nice break and retest type of scenario. Let's just make sure now that we don't get above those 46.90s and we start to break below the 46.80s there. Oh, sorry. This is what I was talking about. We've done our move lower, have our new low. We've now created a new lower high point. As long as we stay below that 46.90 area, I believe we just need to break these lows here for us to have another move lower and basically mirror this right here. If we have a good amount of volume, that can take place. So just be on the lookout for any further bearish price action there. And now for tomorrow, just to kind of have an understanding of what we have for tomorrow, we have manufacturing index. Okay, so, and you, let me see. Oh yeah, manufacturing index, industrial production. So these reports we know are not the most impactful, but still good for us to be aware of this. Let's see. It's trying to push lower. See if volume can pick up here going into this 1 hour close. The further away we can close below the 46.90s, the better it'll be for this new 1 hour candle here as it forms. Because we know a lot of times we'll have new candles open up and they create wicks before continuing with the overall move. In this case, what we would be looking for is 1 hour candle to close bearish below the 46.90s. But then again, as the further we can be below the 46.90s, the better it'll be, in the sense that if it closes and price decides to do an upper wick, we don't want to see such a strong upper wick. We don't want to see such a strong move up. But you can see right there, if we go back to this screen, how again, we're at this precise little low point that these lower time frames just created for us. So we're kind of like within this little range here, where it's like you have a little bit of liquidity get generated here. What we want to do is clear that, because look at how we have, for example, a minor reaction zone, let's say here, followed by a strong move down that pushed from the 46.80s down to the 46.70s in basically 3 minutes once we cleared those lows. And look at how, again, it was the same move that came down was the exact move that basically came back up. It was in 3 minutes we pushed to the lows, just like in 3 minutes we recovered and pushed back up. So right now we're breaking those lows. We want to see if we can really clear that with strong volume and mirror this downside move here. Just delete this. That move here, what I just pointed out. And then also similar to this. It's like basically saying you don't have an area of clear reaction in between this zone here. The clear reaction point is the low or the highs, which is this right here. Meaning that ideally with a good amount of volume, we should push and replicate that move. Not saying it's going to, but we can, just based off of what price action is telling us here. So ideally that would be the scenario there. So we'll just be patient. Okay, the 1 hour candle closed. So all right guys, unless anybody has like any further questions, we're gonna do just a quick overview right here of what we did today, and then we're gonna call it a session, okay? But basically, we understood from the beginning that from a technical perspective, still we were more leaning towards the bearish side because of the strength that we have on dollar and the fact that we have been seeing more bearish price action after those inflation reports showed us higher inflation in the US, right? So the main idea was look out for, sorry about that. The main idea was look out for rejections around the 47.05s because anything above that will signal deeper pullbacks. We got the rejections and we got strong volume and momentum that came in and pushed price to these lows and then even lower. But precisely enough, we got to the 46.70s, which is this exact area of interest right here. And we reacted and we are now, although we are closing very strong bearish, we're still at an area where we've basically rejected these lows right here, okay? So again, what's important for us now is that we don't get any further pushes above the 46.90s because we can see clearly that above the 46.90s, we've ranged and pushed back into the 4700s, meaning that for the upcoming sessions, let's just be on the lookout for that. We want to be on the lookout for further dollar strength and for price to stay below the 46.90s to at least have the potential of getting to the 46.70s. And if we can break those 70s, the 46.70s, 46.50s is the next area of interest that we'll be on the lookout for, which is right here, which is where we've seen once we get below those lows, we reach a new low, and that's the 46.50. So that's what we'll be on the lookout for. Right now, as you can see, this new 1 hour candle is making a move towards the upside. Again, ideally, we do not get back above those 90s, so we're not back in that range. Because if we do, things are just gonna be messy. At that point, just either sit out or be patient for your trades to play out there, okay? So again, you wanna make sure that those 46.90s get rejected and you start to push below these lows that keep on getting created. We had price trying to push lower, but then that was followed up by the 1 hour candle closing, and then right now we're just making that upper wick. So just be careful there, but we know exactly what to look out for, guys. So I don't see any further questions on the chat there. Again, I'm gonna give it like 1 more minute to see if anybody else has anything to say. If not, we'll call it a stream, and I will see you guys tomorrow around the same exact time, okay? 8:15 we'll be on, and we'll go until about 10 a.m. as well, okay? All right, guys. I appreciate you guys for being here. Thank you very much for your time. I'm happy to be doing these lives, and I will see you guys tomorrow, and we'll make sure to do this, okay? Great session. I'm gonna let others know about it too. Appreciate that, brother. Appreciate that a lot.